Welcome to TheoTRADE. This is Don Kaufman. It's January 17th, 2025. Just about an hour to go to the cash close here on this Friday afternoon. S&P's absolutely ripping right now. Up some 65 handles. Good for about a 1% move. The NASDAQ back on it as well. Look at the NASDAQ up 1.8%. And right now, for those of you that are kind of tracking this, we are most definitely outside the upper edge of the expected move. I mean, by a long shot here, too. The upper edge of the expected move was 59.45. We're now trading, well, roughly speaking, almost 60 S&P handles outside of that. So again, some fairly significant movement back to the upside. But before you get too, let's not get too crazy with it. Like, don't bet on this being like, the Trump rally 2.0, because what we're going to show you here momentarily is that bonds, dollar, even volatility, if you will, they say no. Let's actually kind of break this down for you here. Not only looking at like just levels of the S&Ps, because the technicals here are not, in my opinion, going to tell the story. It's going to tell the story is much more about the price action, specifically in the bonds, the dollar. And we're also going to look at like VVIX skew. There's some really interesting things to see in this marketplace that I think tell a very different story than some of the price action in the S&Ps. So in a nutshell, I'm going to summarize before I even get into detail over here. I can tell you that there still can be some upside potential to this marketplace, but without hesitation, we are still in the midst of some fairly extraordinary volatility. All right, let's kind of break all of this down here on this TheoTRADE weekend update. So what's obviously being dubbed now like the Trump rally, 2.0 or Trump 2.0 rally, whatever you want to call it, okay? You're just a few days ago removed from what have been some pretty hefty recent lows. I mean, you just come right back in and you zoom into the S&Ps and you're looking like, all right, this is January 13th. Market's getting just tagged. And here we are just a few trading sessions later, again, up and away. It reeks at this point, if you will, of volatility. And it's the first thing that I really want everybody to kind of understand is that I'm still seeing, okay, definitive and yet dramatic, almost manic volatility in the tape. The easiest thing to point to, and we'll go into some detail here, but the easiest thing to point to you is just look, okay, at the S&Ps and the cash open here for a moment. I'm just zooming in, okay? This is the S&P futures, and I'm kind of just zooming in over here. When I say that, all right, they're still seeing signs of some dramatic volatility, I'm not talking about looking at VIX. I'm looking at like price action, actual price action in the S&Ps, which, okay, when I say it like reeks of volatility and so forth, look at some of these moves. This is a move from, here, I'll just round it, 60.20, okay, up to 60.25, 60.26. This is a 5-point move on a 1-minute candle, okay? And you're getting it in consecutive minutes, okay? And I just pause for a second. For those of you that do trade a little bit more actively, especially on like an intraday basis, does that look normal to you? Does any of this look normal to you? Here's like, over an hour into the trading session, and you have a marketplace that's throwing off, oh, here's a move from like 28 all the way down to like 22. This is a 6-handle move, followed by another 6-handle move, followed by a 5-point move, followed by a 7-point move to the upside. Okay. When I'm talking about still seeing signs of like dramatic volatility, or that the marketplace still feels like, if you will, almost manic, this is one of the first reference points, is that that people, okay, that is not a quiet, like, it's all going to be okay and we're all going to hold hands and go off into the sunset and be bullish again. That's not the kind of price action that you see, right? And that's why I'm saying, like, this marketplace, if you're not looking at it, like on an intraday basis, you might miss this. And as a trader, I want to give to you guys what I see is like, markets being, if you will, like track marks or the hallmarks, if you will, of volatility. And the first thing you see is just the price action, okay, is clearly, okay, defining that this is still rather volatile. Look for yourself. Again, I'm all the way down to a 1 day, 1 minute in the S&Ps. I don't care if you're at 1 day, 1 minute. Like you guys can pull up like range bars, Rankos, whatever does it for you, okay? Range bar is actually not half bad, but I'm just displaying that there's still this dramatic intraday volatility, okay? And that crap is not normal, okay, for a bullish marketplace. Okay, so in the Trump rally 2.0, the marketplace bounces nicely to the upside, no question about it. How we close today, I think, is important. For those of you that are, okay, into technicals, here, I'll give you a kind of an interesting take on some of the technicals. If you are into technicals, okay, just displaying over here. I know that today kind of takes us a little bit out of it, just displaying. I said how we close is important because in the nearest, okay, trading arena, we're still in a pretty violent downtrend. And somebody, of course, is going to comment like, why did you start the downtrend here? You should have come back to here. Yes, but this candle right here, that candle is actually December 18th. In that particular candle, that's when actually the Fed changed course. And I think it's critically important. So we're somewhat in a downward sloping channel over here. Let me remove that drawing. Again, I'm not a big market technician. I don't get too heavily into it. What I do look at, though, are specific levels. Okay, so if you guys tuned into last week's video, I'm going to pull up 180-day 4-hour. I'm going to come over here and I'm going to go to futures, adjust for contract changes, hit apply, hit OK. All I want you to see is I kind of zoom in over here. It is a nice bid back to the marketplace. Without unequivocation, it's a nice bid back to the marketplace because, as I said on last weekend's video, I was talking about that 59.11. We cracked back above it. Like things got crazy. You're below that 59.11, and I'm just boxing it out. All the trade below that, big reactionary lows. Things get wild. We ripped back off of it. Okay, somewhere probably right where we're at here. This is, the 60-50 also holds a degree of weight. So how we close today, like again, I know I'm recording this with an hour to go, but doesn't matter. Like how we close today is critically important. Close strong. You may actually still have some follow through. Remember, the market's closed on Monday, but you might still have some follow through to the upside on Tuesday. Okay, if there is more follow through to the upside on Tuesday, okay, my suggestion at that point is I'm probably going to step in, at least and short it. And I've actually started creating some short positions already in this. So the Trump rally 2.0, again, I still say there's dramatic signs of volatility. Giving you a little bit of update on levels over here. Again, I think there's tremendous weight that holds somewhere right here, right where we're at right now in that 60-50-ish level. Okay, but let's get down to it. Let's get to bonds and the dollar, because it's the bonds, the dollar, okay, and the volatility that really kind of resonate with me. The one thing that I just want to point out is, bonds, they're cratering. Like, I'm not going to tell you anything you can't see on your chart over here. You can even pull up like the max chart, okay, and the bonds are in the midst of one of the largest, most dramatic down moves that anybody's seen, obviously, in decades and decades. Okay, so with the bonds absolutely tanking, okay, let's zoom in now. What we got this week is a nice bid back underneath this. If the bid back in bonds holds, all right, you could have more upside in the S&Ps. I will give you that one, okay? But it's barely even holding in the last 2 days. The bid back in the bonds, and I'm really zooming in now, I want to show you, okay? It all basically came down to like Wednesday. Here on Thursday, Friday, we're trickling back to the upside. There's no follow through to this. So my assumption at this point is we might still roll back over. Okay. Clearly, the bond market is going to be wildly volatile, largely dependent upon what some of the Trump policy is going to be. And I think we all realize that on Monday, after the inauguration, they're going to come out swinging with policy. Look, we're not here to get political. I don't really give a crap, right? But I am going to tell you right now, they're going to come out swinging with policy. And when they do, okay, I think the bonds are going to sell back off. When they do sell back off, it's going to spin that S&P back around. The bonds, to me right now, are sending like a, warning signal, if you will. Okay, the notes have already cooled off. They're actually, down. I mean, it's like nominal, basically flat in the day. that rally has it stopped. And I just don't think it's a good sign. That's bottom line. Interest rates, where they're at right now, bonds where they're at. If the bonds actually sell back off, rates go back up a little bit. Sorry, it's going to be over though for this marketplace. So I think you need to anticipate that, as I said, don't bet on that rally actually having follow through. So the bonds are one aspect. The other big one for me is the dollar. Okay, the dollar cooled off for a couple of days, and when it cooled off, the marketplace rallied. But all of a sudden, the dollar is rallying back over here again. Okay, that just tells me that the marketplace is incredibly instinctive and defensive. And I say instinctive, okay? That tariffs are coming. Like everybody wants to buy US dollars, okay, because they're about to get the crap taxed at them in US dollars. So for the most part, what do you do if you're another sovereignty? You buy US dollars because, you're going to get taxed to death in US dollars. Tariff, tax, I like to use that interchangeably, but it is what it is. I think most people kind of recognize that. So the dollar and the strength in the dollar, that also, it doesn't really bode well. Now, as I said, bonds in the dollar say no, but I'm actually going to add a little bit more intricate aspect to this. And I want to bring up VVIX, okay? So let's talk a little bit about volatility. So the Trump 2.0 rally, bonds and dollar, okay, do not, in my opinion, confirm that rally. Still seeing signs of dramatic volatility, okay, giving you a little bit of an update on those S&P levels. But now let's talk about VVIX and skew. So let's talk a little bit about, when I say VVIX and skew, okay, what we're looking at over here with VVIX. This is the volatility index. And it's just guarded at this point. There's just no question. You're only a few days removed from a VVIX that was cracking 120. Okay, cracking over 120 is extreme. It backed off a little bit, but the point that I'm trying to make, and I'm actually going to cruise down to the bottom of my screen over here and literally, okay, I want you to see VVIX. Okay, it's up today. This is an intraday of VVIX. So that the marketplace today, and it really is unusual to see this. You have the S&P's up 1%. It's a rip and rally, whatever. It's 1%. You got the marketplace up 1%, but you actually have volatility kind of coming back in here. Because I think the marketplace sees the same thing I do, and that is what's coming next week, okay? Probably some wild trade. I mean, even when I look at the S&Ps right now, they reek of volatility, right? Watch them. They're not even trading linear. They're up 60, okay? Then they'll be 58. They're jumping around a little bit, okay? Things are getting crazy. Look, I know it's upside, okay? But as I said, midweek, the Wednesday video, the hallmark of volatility is usually those up moves. And these up moves are violent, okay? So be aware, a lot of volatility in there. Now back to my scratch pad over here. So VVIX. VVIX is still in a heavily guarded stance, not dissimilar to what bonds are, not dissimilar to what the dollar is. The other one that's a little bothersome, okay, is skew. Okay, skew doesn't do anything but kind of confirm people are hedging. That's it. People are hedging. If you look at I guess basically the full life chart of skew has never been this high, okay, for this long, ever. And I'm kind of circling it over here because I'm just trying to detail. Look, I don't want to get into price specifics. Doesn't really matter. What skew is, okay, it's just a measure of out of the money options. So skew is high, okay, when trade runs to a product called SPX. SPX I often call the mother of all products because the SPX really drives order flow. So the skew is high when traders run to a product like SPX and they buy puts, okay, often for protection, and then they sell calls, okay, to offset some of the cost of the puts. And I say some of the cost. What the skew actually measures is the put premium, okay, the implied volatility of the puts versus the implied volatility of the calls. And the higher the skew, the more, okay, the differentiation between the puts and the calls. And a high skew is indicative of puts are super expensive, calls are super, super cheap. It just means that the marketplace is hedging. So as I said to you, it's more like a confirmation of what? Of what I was just saying a moment ago is that what you basically have is you have a high skew, okay, but then you also have people still using VVIX. VVIX is the volatility of the VIX, okay, even though you're looking, oh, but the VIX is down a lot the last couple of days. The VIX might be down, okay, but the VIX is not really what they're trading. They're trading the volatility in the VIX options, and that's up. The volatility of the VIX options is actually going up, which tells a very different story than looking at the VIX. Okay, so it's a little bit of like a catch-22. And the reason I'm pointing this out is, like, as I said a moment ago, like all signs still point to volatility. I also said, like, wow, look how this marketplace closes. Maybe we sell off a little bit over here. Like, I'm not really concerned about the sell-off unless we get, we drop back like 30 points though. We're just right back inside of this volatility channel. Like we're right. I mean, it would do me nicely if I could go into the weekend, seeing the markets right in this neighborhood over here. For me, that would do it. Okay, going into 3A weekend, I don't want to look at the S&Ps up 59 all weekend. If we're going to go into the weekend, come on, bring them down. Okay, all right, turn those machines back on. Okay, so let's go back to our little itinerary over here. So I was talking a little bit about obviously the update of the S&P levels, looking for a pullback into the close. By the way, I don't know if we're going to pull back into the close. I'm just saying it actually fits the profile of the trading session quite nicely. Okay, let's talk a little bit about some of the trading this week. Okay, because it was real and it was spectacular. I have to tell you, up move really helped me. It helped me. Couple things I hit. Let's start with the SPX, the mother of all products. So each and every week here at TheoTRADE, okay, I shoot out, okay, a couple of trades a week. So it's called 3 trades a week. And the first trade that actually shot out this week was a SPX call butterfly right up here, right on the upper edge of the expected move. He shoots, he scores. I was talking about this last weekend. I had hit like a bunch of these SPX butterflies. Check this out. This is 30 days. Okay. That's 30 days. Wait. I'm even going to go back. Let's get crazy. Let's just go back 40 days. Okay. We're going to go back 40 days in here. I hit a butterfly for $5. I hit a butterfly for $2. I hit a butterfly for $2.95. And this week, okay, this is the most meager week. Still hit a butterfly though. Paid 60 cents for it. Closed it for $1.75. Okay. It has been absolutely spectacular, okay, in terms of the SPX and the expected move. If you guys are not into these trades, you need to get into these trades. In the SPX butterfly, you got to do what you got to do, okay? We're hitting butterflies left and right. Normally this is, these butterflies, they're good, okay? But we're 1, 2, 3, 4 trades, okay, in the last 40 trading, 40 days back, not even 40 trading sessions. This is starting actually basically just over a month ago. So it has been a spectacular run inside of the S&Ps. And I'm just showing, the history of the fills in here. Now, the other one in Boeing, okay? In Boeing, I had a bearish trade in here and this thing tortured me, okay? Pulled back just enough, got out with a 30% gain, okay? Meta, ironically, earlier this week, had a bearish trade. Meta dipped hard earlier this week, okay? That's another one where, let me just go back and show you like the last 7 days of order flow in here, okay? In terms of Meta, that's the close. I guess I got to go back about 10 days, okay? In terms of the open and close of this one, so 12 days, okay? I know it's got to be in there. This thing's just taking forever. The Meta trade closed profitably. There it is. I knew it was only a few days ago. Okay, the Meta trade closed profitably. It's another 30% profit on the Meta trade. Okay, then we actually had the GLD trade. Okay, for those of you that are actually in GLD, that's a little bit further back. Okay, let's go back about 30, 40 days. So in the GLD trade, okay, in GLD, this is one that we actually closed for over 55% gain, another in-out spread. So kind of firing on all cylinders over here when it comes to not only the SPX flies, these are in-out spreads. So Boeing closed profitably, Meta closed profitably, GLD closed profitably, earnings flips. For those of you actually following some of the earnings and earnings related trade, okay, in Delta, okay, we actually did a earnings butterfly. This is an earnings flip in Delta. Opened for 54 cents, closed for $1.20, $1.25 respectively. Okay, this week, Taiwan Semiconductor. Okay, in Taiwan Semiconductor, opened the trade for 40 cents, closed it for $1.30. I mean, we're talking again, 200-300% in some of these trades. Taiwan Semiconductor hits scores. Okay, United Healthcare. Okay, this is UNH, United Healthcare. This is actually a really interesting one in terms of, apologize here, UNH, okay, in United Healthcare. This is a really interesting one because I opened it for 30 cents. Okay, opened a bunch of these actually for 30 cents. Closed some of them yesterday for 90 cents, but is able to get out of one today for $1.40. Just home run. By the way, if you're kind of curious, yeah, what's the well, which ones did you miss? How many earnings flips did you do? Okay, we hit Delta, we hit Taiwan Semiconductor, we hit United Healthcare. The only one that we've actually missed in the last 2 weeks, okay, is Morgan Stanley. Like literally the only one I've actually missed is Morgan Stanley, which is, it'll expire worthless. I am fine with that, okay? As I said, like trade, this up move helped us, okay? Gold, Meta, Boeing, the volatility, I'm all about it. Now, last but definitely not least, let's cruise over to the SPX. So no preconceived notions here about SPX other than, okay, what we're about to look at, and that's volatility. Okay, when I say no preconceived notions, what I'm trying to look at in a very pure manner, okay, is what's really going on in terms of expected moves. And one of the interesting things is, okay, 2 weeks ago, we cracked outside the expected move and closed outside the expected move. Today, okay, we're kind of looking like we're going to close outside of the expected move. Now, this week's expected move was $100, okay, and $17. This week's expected move, okay, is $117, meaning you're looking for $117 up move, $117 a down move, okay? That, people, is, again, it's of critical importance that we just know, okay, in general context, what the expected move happened to be, okay, overall, and how far outside. And the reason that I'm talking about outside the expected move, and I'm pointing out, the week before and this week, you have to recognize what is the market telling us right now. The market's telling us, okay, that the volatility is getting unruly. The market's actually, it missed it last week and it missed it again this week. So the implied volatility, in effect, it said like, oh, the market was supposed to move 117 points. Well, it didn't move 117 points. It moved what? Dramatically more. Okay. So the implied volatility, if you will, is getting outstripped by actual price action in the marketplace. So when we talk about like, oh, there's still hallmarks of volatility, this is also some of the hallmarks of volatility. Market's getting a little bit unruly. What, though, do we look at for next week? So next week, again, it's only a 4-day trading week. What's the expected move next week? About 87 bucks. So the volatility, you're like, oh, it's coming off a little bit. Yeah, you know what? We had $117 of expected move. Okay, next week we're expecting $87, but it's $87 on what? A 4-day trading week. I'm going to tell you right now, we're going to see every bit of $87 into the next week. We're going to start kicking off into earnings season. I was talking about earnings flips a moment ago. With those earnings flips, it's going to be in high gear. Okay, we have more economic data coming out. I mean, this entire week, okay, if you will, you can call it, the Trump rally 2.0, or you can call it, you got lucky on CPI. But I'm going to tell you right now, there's going to be more volatility. Get ready for it. Even though we're portraying right now about an $87 expected move, I'm going to tell you again, to reiterate, you're going to get every dollar of $87 of movement. This marketplace this week, okay, saw what? The CPI report and the S&Ps explode by like 100 points in a matter of a few seconds. To see only $87 for an anticipation of movement all of next week, okay, I'm going to tell you, as I said, like you're going to see the over on that one. So we're setting up again for some more volatility. Obviously, a lot of policy is going to be hitting the tape next week, probably a few tweets here and there. So again, strap in. There's going to be a lot of trading opportunities early next week, and I intend to take full advantage of those. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.